February 1st, the very important day, and the big announcement out of the Federal Reserve. I have all the details and exactly what you need to know right here in the video, so let's get right into it. All right, now in this video, I want to discuss February 1st and the big announcement that will be coming out of the Federal Reserve, as we got to pay attention to what is actually going on because this is going to impact all of us in some way, shape, or form. Therefore, this is a very big and important announcement and exactly what I want to discuss for you right here in the video, so let's get right into it. However, really fast before we do, thank you so much for joining me. If you're new here or if you haven't done so yet, please make sure to subscribe by hitting the button right down below the video, as it's totally free to do so, and because I am your one and only daily advocate, I'm here for you right by your side every single day, watching all this new information hitting the wire, doing all the research, and breaking it all down into these short videos so you can stay updated with what is actually going on, as all of this is going to impact us in some way, shape, or form. And of course, for those of you that are low income or fixed income beneficiaries, I want to let you know how all of this is going to impact you, your money, your benefits, your lifestyle, your bank account, and of course anything out there right now you can possibly grab and or take advantage of, including money, benefits, raises to benefits, checks, programs, stimulus, or anything else like that. Of course, I want to bring it to your attention right away. So again, thanks so much for joining me. Please subscribe down below if you haven't done so yet, and also remember, I'm here for you in any way that I can be. That's my dedication, that's my commitment, and that is my promise to you and everybody right here in the community. All right, thanks again. Let's get into it and talk about the big announcement out of the Federal Reserve on February 1st and why this matters and why we want to pay attention to this. All right, so here's what it comes down to. Every 6 weeks, the Federal Reserve meets, and it's called FOMC, Free Open Market Committee meeting. So basically, they get together, all of these economists, and they hang out and they decide what they're going to be doing during this 2-day meeting with their interest rate policy, what's going on with the economy, and what they need to do moving forward. Well, as of recently, over the last 10 or so months now, we've seen the Federal Reserve coming forward, raising interest rates very aggressively, right? So basically through the summer and into the fall of 2022, we saw the Federal Reserve raising interest rates by 75 basis points virtually all of their meetings, right? This was very, very aggressive, and the whole idea behind this is to bring down some of this inflation. Well, that's to be debated yet, if it's actually working or not. Yes, maybe a little bit, but again, it's, we still got a lot of work ahead of us. Well, as of the afternoon of February 1st, that is when we're going to be wrapping up the next FOMC meeting. This is when they're going to wrap up their 2-day meeting. So they wrap this up, and then shortly thereafter, the chairman of the Federal Reserve, Jerome Powell, will be coming out with his regular news conference and, answering questions and all kinds of things like this. But we'll be getting this announcement for the interest rate policy on that day. So again, what are they going to do? Are they going to raise interest rates again? Are they going to pause? Are they going to pivot? Are they possibly going to start cutting interest rates? Now, all of this is up in the air right now, because as of a couple months ago, we got some new information out of the Fed where they were going to be saying, or where they said that they're going to be kind of digesting and researching what all of their interest rate policy increases have done to the economy before they move forward with raising aggressively again. Well, we're going to have to see here. What do they do with this policy, or what do they do with this meeting, and what are they going to be doing with interest rates yet again? So we know that inflation is still very much a problem right now. As I mentioned previously in other videos, the benchmark for the Federal Reserve is generally 2 to 2.5%. That is where they want inflation to be. We're still sitting about 5% above that, right? We're still very, very high with it when it comes to inflation. Well, in order to bring that down, the Federal Reserve still believes we need to continue raising interest rates. Now, what does this mean for us, the consumer, the American people? What does this mean for us? Well, it means that if we have any kind of debt, and here's the deal, if you have any kind of debt, I guarantee it, there's going to be an interest rate tied to it. It could be low, it could be high, it doesn't really matter. There's going to be some kind of interest rate tied to that debt, because that's just how it works, right? You borrow money and you pay interest on it, right? So whether that's tied to a credit card, maybe it's an auto loan, a student loan, a mortgage, a home equity line of credit, a personal loan, a line of credit, literally doesn't matter. They all have interest rates, right? Well, obviously, depending on what we're talking about here, there's going to be different interest rates tied to all these different products. But we know that interest rates are very, very high right now. In fact, the interest rate on the average credit card in this country is just below 23%. It's crazy, right? 23% interest. That's a lot. I'd love to be on the receiving end of that, right? I mean, seriously, I think we'd all love to be on the receiving end. Unfortunately, it's not us, it's the banks. Gee, what do you know? The banks are on the receiving end. Are any of us surprised? No, not at all, right? The banks are always on the receiving end of the highest interest rates, right? So anyway, that's what it comes down to. And this is why we got to watch all this, because if we have anything, and including adjustable rates on any types of debts that we have, like credit cards, for example, or home equity lines of credit, or maybe like an adjustable rate mortgage, or any of these things that are not locked or fixed rates, we're going to have to pay attention to that, because that just means the cost to borrow money is going up, right? So if we're floating a balance on a credit card, which a lot of people are, because we've talked about all these reports here over the last several months here, we continue to see all these reports coming out showing the American consumer, as in us, the American people, continue to float more and more balances on credit cards because nobody has money right now. So if you don't have money, where do you find credit? Well, probably on a credit card, right? Unfortunately, these also have very high interest rates. Well, as a result of that, if the Federal Reserve comes in and raises interest rates yet again, guess what's going to happen? That's also going to raise the interest rate on credit cards. Great. Just what we want to do. Pay more interest with money that people don't have, right? Well, unfortunately, this is the vicious cycle that I've talked about for so many months now. I continue to call it the vicious cycle because that's what it is. It's a vicious cycle that keeps going round and round, taking money from people that don't have it and burying those people deeper and deeper in more debt, right? So again, you probably already know what I'm talking about. I mean, seriously, this is the case for a lot of people, and unfortunately, this is just how it's set up. So, as a result of that, we've got to watch the Federal Reserve very closely here and see what they're going to be doing on February 1st as they wrap up their two-day FOMC meeting. Will they raise interest rates? Will they pause? Will they pivot? What are they going to do? Well, that's all going to be determined here in a matter of just days. So this will be very important to continue watching here. And of course, I will continue watching it very closely, but I wanted to bring this to your attention to let you know it's going to be another important day here, and the announcements coming out on that day are very important to watch. Now, here's what I would anticipate. If you're somebody that watches any types of markets out there, the stock market, bonds, crypto, anything like that, doesn't really matter. These markets are going to be very volatile on that announcement. So just be watching. It's likely the markets will be moving all over the place. Generally, what they do is they move in one direction for a short amount of time in a very fast, aggressive manner, and then usually they flip and they go the opposite direction. Now, again, doesn't mean it's going to happen this time. I'm just simply saying, just be aware there's going to be a lot of volatility in these markets, and as well, whatever the Federal Reserve does here, this will also play a major role in the real estate market as well. As we've seen over the last several months here, the last, year or so now, we've seen the housing market, the real estate market really fallen off a cliff because interest rates went from about sub 3%, as in just below 3% at the beginning of 2022, to where they're currently sitting right now, which is very, very elevated, right? Depending on where you're looking and, depending on which day you actually look, I mean, we're looking at 7%. We're looking at higher than that. We're looking at lower than that. I mean, seriously, we're looking very high. So we're looking at like 4.5% higher than what they were just a year ago. So it's a big deal. We got to watch all this stuff closely. So anyway, of course, I'll watch that announcement on the 1st of February. I'll let you know what it means. I'll digest all that information and break it down into a short video, and I'll bring you that information as we get it. But again, another big announcement coming out, and we got to continue paying attention to all this stuff because unfortunately, all of this comes back on the consumer. And guess who the consumer is? We are. We're the people, and we've always got to watch this because their policies impact us directly. So anyway, I'll continue to be here for you in any way that I can be. Please make sure to subscribe down below if you haven't done so yet so you don't miss any videos going forward. Share the video with your friends, family, social media, and go back and check out any of the other thousands and thousands of videos here on the channel. Until next time, enjoy your day, stay warm out there, and I'll catch you again later in the next